government set out the asset monetization scheme, whether disinvestment or sale of properties and assets held by some of the public sector companies. Very important and indeed hugely successful Air India deal. I cannot even explain how tough I think that deal was. I had worked on it at the stage when it was almost sold to the Tata Group last time round. And that was, 15 years ago. And it's wonderful to see that that company has found its home. But, we've got the LIC IPO, etc. So this is, again, a very important agenda, which, of course, needs to yet happen and come home. The financial sector, the improving of the insolvency and bankruptcy code, very important step, all in the right direction. Manufacturing, the huge success of the PLI schemes. I say huge success in that it's new. All kinds of surveys are suggesting that people believe this is one of the big things this government has done. But again, it is about ensuring that the implementation moves ahead. So implementing all of these in terms of very good strategies already announced are really less about new reforms, but I would like to hear and see more through the budget of how these are doing and what else might be done to ensure the success of these kind of announcements made, all of which were absolutely in the right direction. Now, otherwise, and the big question is the fiscal deficit, where we are on a journey to contain it. And I think there's some expectation that we might even, commit to continuing the fiscal deficit containment journey. But I would argue for ensuring that as the economy is bouncing back, it's still not where it needs to be, that we should not be in a hurry to pull back before we can actually make sure that the economy is on a stable footing. And for that, investment by government, which was, again, started early, which was the right thing in infrastructure, because that enables demand to go up. It helps industries to supply cement and steel and all the things which keep the economy going. So ensuring that we can continue with government spending, infrastructure and otherwise, and for which government will need money and for which the fiscal deficit it becomes a challenge if we look to contain it too soon. So I think that would be important. A second key area is rural demand. There are clearly issues in rural India, I think, around health, and very much driven by the pandemic. People have had to spend more. People have lost those that were earning for them in the families. So there is pain in terms of rural demand, because when you look at any of the consumer product companies today, they're all saying rural demand is not where it could be or where it should be. So how do we ensure that there's money and funding going back into the rural economy? And this will happen through agriculture, through construction. I was quite struck by some of the statistics I've seen where construction has become the big new employer in rural India. Building local infrastructure, building for sanitation, building for water, these big programs. So by putting more money into the rural sector, we help that demand because we enable the earning power of women and people at the rural level to enable them to really furnish that demand, which is what we want for the country to see consumption grow. So investment, consumption to increase demand. And I think in terms of, the whole discussion on inflation, we have seen inflation now filtering into the food space. It's happened largely, I think, of the high costs and the excise earning that government was making off fossil fuel and products, where we saw the very high taxes on petrol and diesel and the very high prices to the consumer, therefore, of petrol and diesel, which translates to logistics, transportation costs, and finally comes back to the consumer through high price of goods. So that inflation, which is clearly now happening, and government, you can see governments now beginning to pull back on the price of petrol and diesel and the taxes therein. So at one level, government's earnings on excise from these products goes down. And it's had very robust revenue collections aided by some of these. But on the other, it is the right thing to do to make sure that we do not have this kind of inflationary impact across sectors. And I would just end by saying that one of the biggest challenges for a lot of manufacturing today is input costs have increased enormously. Cement, steel, I mean, these are products which have gone up enormously, other than, of course,
raw materials, import barrier is there.
Absolutely. And that too, because import barriers were there to help the local sector. But as it turns out, these are very often input costs for many companies, including for our exports. So as input costs go up, because import duties are up, I would hope that in this budget, we will see some rectification of this, but certainly no increase in import duties because it has an impact on costs, both for local products and for exports.
Absolutely. And similarly, on the other hand, you have Tesla, which is, trying to communicate so hard via social media that, the duty has to come down. Otherwise, it's the biggest barrier that it is facing coming into Indian market. But that's a separate subject altogether.
Yeah. And the auto sector has traditionally had this very high import barrier.
And also, I mean, because of the rise in the input cost, as you rightly mentioned, I think Maruti Suzuki or some major automobile company has raised its price for the 5th or 6th time. I was reading in the newspaper in the past 1.5 years. That is purely because of the fact that the input cost have gone up, as you mentioned.
And now, it's not just input cost. I think we should not forget that there's been a lot of supply side disruption. So whether it is to do with components, just the sheer availability of semiconductors, or indeed the speed at which these can come in, the huge increase in container costs or unavailability of containers, all of this, so it's the cost, but the cost impacted also by the supply side disruptions, which is causing some of this price increase.
Absolutely. Now, since you mentioned about the fact that, government is looking at disinvestment, and Air India sale is the first feather in the cap, if you can call it.
Big feather, really.
Big feather. Now, if government is looking at disinvestment, so on the other side, you have to boost private investment. That's only government can successfully disinvest. How well do you see the private sector's response to it?
So you're saying private sector being a buyer for some of these assets? Yeah.
Like, of course, Air India found a home in the Tatas, but now there's Shipping Corporation of India. There are other entities. Do you think that the private sector there will be an agile response from the private sector to lap up to these assets?
The answer will lie with each company, each sector. Some are more challenging than others. And I think the practical approach that the government took in Air India is what is called for. The deals have to be crafted in a way that makes sense. And I saw this when, for example, I was in my investment banking days working on the VSNL deal, where VSNL owned huge amounts of real estate. And there was no way that it turned out it was the Tatas at that time too wanted to buy all that land and real estate and pay money for it. They wanted the business. So how do you tackle it? So you tackle it by separating the businesses which are really not fundamental to the business. It didn't impact the employment of the company. It didn't impact the business of the company. And it was being given a huge value by government, which really nobody wanted to pay. So why not government hold on to those assets and sell it in its own course rather than try and lumber it in the business? So these sort of practical solutions and responses on each deal will be important as we look at crafting deals. If government follows a very regimented process, which it tends to because of this whole issue of otherwise the past coming back to haunt you. And we have seen deals being reopened for all kinds of CBI inquiries, etc., which I think is a bit unfortunate. But the government has to have the courage to transact and do deals, do it with full transparency. But in not all deals are you going to easily have 2 or 3 bidders to transparently show that you've gone to the highest bidder. And there will be bells and whistles around each deal based on the buyer. When you do M&A deals, it's very hard to do cookie cutter type of deals. And when you do it in an environment where you keep You can come back 15 years later to revisit it and throw someone in jail. It's not going to help. So I think we have to have courage when we do these deals. We have to do them, of course, in an above board way. But we also have to ensure that those who sign those files get some protection from such revisitings. Otherwise, these deals are going to go around in circles.
True. Now, government has an ambitious target of disinvestment with LIC IPO approaching like a behemoth. Do you support this strategy of LIC going public? Should LIC go public according to you?
I mean, look, it's huge for us as Indians to have this behemoth listed. And it is a very fine company in terms of a market share. I mean, I sit on the board.
Looking at a valuation of 10 trillion Indian rupees.
And look at the market share. I mean, they're remarkable in terms of the way they have maintained share despite the private sector competition that came in. In many industries, we found where the private sector entered, the original monopoly, public sector ownership, owned company actually just dissolved into nothingness. You see that in MTNL and BSNL, etc. But what you've got here is a behemoth that remains a behemoth, maybe not with that same market share. Now, to do this through a public offering, let retail investors, global investors all participate in it is absolutely the right way to go. And it is going to solve for a lot. It's going to happen at a time where the government will continue its ownership, so it doesn't even change that. But it brings money into the kitty at a time when we need it most. We've had all these extraordinary pandemic costs. We are still needing to invest. And we still want to commit to the fiscal deficit as we should be contained. And the big plug figure there is got to be the LIC IPO. And the only thing is, I don't think we will get the benefit of it pre-March. I think government's still trying, but these deals are not easy. And in a very volatile equity market, never easy. But I'm hoping that, if not this year, in the next financial year, we will have this benefit and it will close a very big gap for us. And money that can be very well used.
True. At a 5% equity dilution, what the government is looking at, it is looking to raise about 50,000 crores. So that makes the valuation about 10 trillion Indian rupees. That is,
and don't forget,
that will be the biggest IPO, I mean, after ATM.
Absolutely. And once listed, you have the ability to continuously offer more into the market. I mean, it will bring its own share of issues for LIC, because how LIC discloses its workings as a public listed company, how it works, there's going to be a lot more for them to contend with as a listed entity. But as a listed entity, I think those disciplines are also good for LIC, but they're certainly a great boon for us in India.
Now, cryptocurrency is the talk of the town. Do you think we are late in accepting this reality?
I think it's such an evolving scene that there's no benefit to being right up there and charging forward. And we now have the benefit in hindsight of seeing how other countries are solving for it and getting comfortable with what that framework should be. So I'm glad that the government's taking its time in understanding it and grappling with the issues. But the fact that we should have a policy is important, and that it be aligned with the rest of the world is important.
Sure. Now, the economy has weathered the pandemic shock. Do you believe that? Can we now safely believe that the Indian economy is immune to any more waves or lockdowns or pandemic shocks?
So I wouldn't say we're immune at all, and nor do I think the shock of this third wave is not felt. It is felt.
It is felt, yes.
There are MSMEs that were already struggling, particularly in the service sector, particularly in the contact sectors, particularly in restaurants, hotels, hospitality, tourism, who are suffering. And this third wave is going to be another nail in some of their coffins, frankly. Yeah. So what this third wave has done is only endorsed a K-type recovery. And a K-type recovery is not good. A K-type recovery means, yes, overall, it looks good because some companies carry forward and do really well and actually benefit from some of this volatility. e-commerce, etc. But on the other hand, there are those which are really hurting and suffering and may even die in the process. So it is about giving attention to those at the bottom of the pile and those sectors which we want. I mean, we want our restaurants. They're big, so not just service providers, but employers. We want the hospitality sector to survive. And the helping hand we give these, and I'm hoping this budget will bring that. It didn't bring much reprieve last time, but these are the sort of sectors which will need attention. So the shocks are still there. And there's also, at the end of the day, now you see the way the shop owners are feeling in cities like Delhi, odd even, closed on weekends. This all has impact in terms of their business. Yeah. And I think these are the shocks which will play out. Luckily, we haven't seen complete shutdowns. And I think the logistic chains and supply chains, which were disrupted the first time round, those disruptions have not happened. So you're right that shock is in there because that was really very, very painful for industry. But the way industries are now looking at it is that typically industries look to efficiency. Efficiency meant productivity increases. Efficiency meant that you operate with low inventories. That has changed to being also about resilience. So resilience is about making sure you have extra inventory that comes at a cost, so that if there's a shutdown, you can supply the market as you need to. If resilience also means that you sometimes have to have excess capacity because your capacity is going to go up and down in terms of utilization, depending on if you have a COVID wave, you may have to shut the plant because all your workers get COVID sick together. So these disruptions are all come at a cost. And I think it plays out, therefore, into the inflation of the country, because there is a cost for operating in a pandemic environment.
Sure. And as you rightly said, the restaurant industry, like after the Delhi is the only state currently which has stopped dine-in. And there was an entire report in a newspaper which stated that more than 2.3 million jobs have been lost. Many Michelin star restaurants have shut down because they are not the ones who can operate on Swiggy and Zomato kind of costing. I mean, on Swiggy and Zomato, you won't order a dish which costs about 1,500 or 2,000 rupees per plate. That's not the audience for that. And apart from that, also that there was a very famous restaurateur who quoted in that he was interviewed, and he was quoted that he didn't even have enough money to consult a counselor or a therapist because of the frequent lockdown. So yeah, these are some of the issues that I think even that the government should look at the time of the budget, because certain touch sensitive sectors have really lost their mojo, including cinemas when it comes to entertainment.
Yeah.
Now, do you believe that, should this budget be Aam Aadmi's budget so that he gets that comfort room to come and spend on consumption to boost certain sectors such as this, what we talked about? Discretionary spends are at an all-time low. Whenever you have a little wave coming up, only the essential items are stocked in huge supplies. But the discretionary spends, which actually make up the economy, they are at an all-time low. Yeah. Do you feel we need to address the same to bring back the economy in action?
Absolutely. And it's not just Aam Aadmi, it's all the way through, I would say our middle income sectors, for everyone to feel good. And the good news is at least those in the stock markets are hopefully feeling good. But if we can give them that sense of comfort and money in hand in a way that money is available to spend, it is absolutely required, because that is the demand side that I mentioned earlier that is important for us to generate, that consumption needs to go up, even while we look at the investment side, which we have done well. And for that, some of it is perception and people feeling good about life and feeling good about spending, but the other is actually putting money in their pockets. So absolutely a very important way of moving ahead.
Absolutely. And now, ma'am, you have been a banker at the helm of affairs. What structural reforms do you feel the Indian banking system needs at this point of time?
That's a big one. But I would hope that government will continue to move ahead on its announced policy of at least some of the public sector banks being
Merger?
moved, into the private sector.
Hmm.
I think, I mean, not I think, I firmly believe that having such a large preponderance of ownership of banks in government hands is not required at all. Whether government does that through fewer banks,
Hmm.
which is what I think is the right strategy, or in any case, enabling other banks to grow, and that is really more, an RBI thing than government. But the move to ensure that we have a much better distributed banking sector
Hmm.
would be important. Right now, our banking sector, to my mind, is under capacity for the growth the country must and should see. Uh,
Hmm.
and for which we need larger, more banks, and banks that fill all the spaces. So some of the moves that have happened with banks that are catering to the MSMEs, SMEs, NBFCs that came in to fill in the gaps are all important. Each of the financial institutions, other than the banks, are important. And the second is we need a far more robust capital market for debt and bonds so
Hmm.
that companies can move very rapidly from being banked by the banks to the capital markets. And there is some move again for government to encourage it. But to do it, we need a proper bond market.
Hmm.
And companies then not relying just on the banking sector, but moving to bonds and the capital markets, and that to longer tenured bonds. So,
Hmm.
where the typical financing in a bank is 5 to 7 years, bonds can be up to 20 years.
Hmm.
And so you move to longer tenured debt, which is also good for the company because
Hmm.
it's more stable on the one hand, and on the other, it takes the pressure off the banking system. So we have to look at that entire financing piece
Hmm.
together in a way that takes pressure off the banks, gives
Hmm.
us more banks, gives us more banks in the private sector, and on the other, that we have a robust debt market.
Sure. Now, ma'am, efforts such as the Insolvency and Bankruptcy Code 2016 were made to achieve faster and better recovery from sticky assets.
Yeah.
Do you feel, looking at the kind of litigation, the amount of companies that go into liquidation, the amount of employment that is lost in that CIRP period, where typically RPs are such that they do not understand each and every business, and it's human. I mean, one person probably who's a chartered accountant or who's a company secretary, with all due respect, need not understand a steel sector or an aviation sector, or for that matter, any other sector. Do you feel that the IBC has been successful in doing so, apart from the few big companies getting buyers? Others are just, I mean, lost either in litigation for about 3 years, or they just get liquidated without any money recovery.
It's a highly technical area and one which India is very new at. So, should we have the IBC? Absolutely. Can it be implemented better? Absolutely. Have we started on the journey in the right direction? Yes, we have. So, yes, clarification is required. It is fraught with legal risk. There was initially not enough clarity on whether promoters could bid, not bid. And so we saw some of the legal activities around that. So, as this clarity emerges, it will help the way. I think it's also been through a period, to be honest, right through the pandemic, where even the ability of the courts, etc., to meet has been limited, and face-to-face meetings were an issue. So there have been lots of struggles along the way, to be fair. But it is a space that requires attention. Having a very much more robust system, which is well armed with the right sort of, we see the IBC moving in different levels in different states. So each needs attention at a level which enables very quick outcomes. So we must absolutely speed up the outcome. But I think this is just part of the journey. And I do recognize it's not been an easy couple of years from the time it was launched. I think the approach also, I would really like to see the banks that come together in consortiums move faster, because I think you allude to this correctly, that the ability to be able to solve faster saves companies. You've got a patient on a table that needs oxygen, yeah? And if that oxygen is not being administered in time, you've got a half-dead patient by the time the solutions are found. So I'd rather keep the patient alive and make sure that that oxygen is administered quickly, swiftly, and the company allowed to move into other hands or and shut down if it's not going to work.
Absolutely. Now, which sectors do you see riding the Indian growth engine? Which sectors do you feel have the potential to fuel the 9% or a 9.5% GDP growth?
You know, the good news is India is so well placed across a wide variety. So riding that whole curve for India is the whole ITES space, which has done extremely well. And through digitalization and through some of what the world is requiring, India not only continues to be a provider, but is in fact growing its presence in that space. So that I think continues, and it's a big export earner for us. Pharma, India continues to be a big global player.
Yes.
Extremely successful in the way we do it. Can we do more? Absolutely. Should we do more R&D? Can the government give more support to R&D and clinical checking and testing and enabling that sector? Yes. Medical tourism, not easy through a COVID travel environment, but I think India is well placed to again provide that and grow its skill set therein with the large number of workers we have at every level, not just doctors, but the attention, care, nurses, all of that. So these have been our traditional strengths and absolutely must continue. I think there's so much that can happen in the agribusiness area. That is one which we are addressing, but we are certainly not where we could be given the large agrarian nature of the country. So the whole agribusiness, agri-tech area could be a big driver where India becomes an exporter of multiple products, not just grain, but multiple products, processed products across the world. I think our big focus right now, rightly, is in substituting some of the imports that we have traditionally brought in, electronic goods, and therefore the PLI scheme was looking to address some of that. So the manufacturing we will see in country, which is playing on Indian demand, the huge Indian demand for electronics, which we were otherwise importing, etc., are again big drivers of what growth will look like going forward, because we know the pockets where we have not been manufacturing and we are now looking to address it by doing it locally. It may still be largely assembly, but that is a good start. I mean, Maruti started like that in the country. And the Maruti model needs to be replicated across industries, because what Maruti did for the auto sector in India and the huge number of auto ancillaries that came up to make India an auto ancillary supplier to OEMs around the world is what we need to do. So it isn't just the product, but that entire supply chain that we create in the country. And what Maruti did for India, the 25, 30 years ago was unbelievable. And that's what we should replicate across industries now.
True. And my last question now. 2021 really saw a great amount of IPO frenzy. I mean, billions of dollars were raised from the Indian capital markets, so to say. And this was largely led by the tech companies, the startups, whom we call, they now maturing and going in for an IPO for public funding.
Yeah.
So what happened was valuation of these companies were largely private, of these tech giants, till the whole dynamics changes when you go public.
Yeah.
Earlier, the entire valuation metrics when you're largely private is your GMV, gross merchandise value, how many people you have in the kitty. But when you go listed, I mean, the retail investors, the institutional investors are a bit more ruthless than just the venture capital funds or the private equity players. They look at your PAT, they look at your EBITDA. I mean, that changes. Do you believe that the Indian investors are ready to value these future business models? Because we saw them getting listed, a majority of them now trading below the IPO price, heavily discounted, about 30-35%, investors losing good amount of money since the IPO price. Now, these are all basis and assumption of a future business model that 5 years down the line or 10 years down the line, I might earn money. Do you believe that the Indian stock market or the Indian investors or the Indian retail investors will buy this idea that, okay, after 10 years, you'll make money?
I always worry when we get the sort of hubris we have in the stock markets right now.
Hmm.
I worry because I've seen these waves before through my career. And the worst thing that can happen is when retail investors, and we want them to be investing in stocks. I mean, it is bringing money from under mattresses into the productive sectors of
Hmm.
India. You want that money to play in growing industry and ensuring that it is playing to the wealth of the country. But we will frighten these retail investors away if they lose money like this, right?
Hmm.
So that those IPO prices often priced high because of the exits of maybe
Hmm.
funds that were invested there or promoters who are exiting. And it's happened with the exits happening from the FIIs, FPIs to retail investors. So
Hmm.
they've made the money, retail investors have lost. This is not an ideal
Situation.
solution at all. And I do worry about it. So I think we need to continue to educate our retail investors. I hope that we can see a little more responsible response to the IPO pricing. I mean, some of it is markets also come down and then, you sort of come down with the market. But prices which were seen as being too hefty, we've seen how those companies have been punished in the market. Some are quoting 60% below their IPO prices, right? So that is not a good place to be in a year. So it's not about a retail investor waiting for 10 years. It is really about getting that entry and exit strategy for the company right. And investors have a very long memory about the companies that didn't deliver to them.
Hmm.
So it impacts these high growth companies as much. How
Hmm.
easily can they return to an
Hmm.
IPO market when they have not rewarded
Hmm.
their new investors substantially? So I think it's a bit of a chicken and egg, and we have to get this pricing right. The intermediaries have to get it right. Retail investors have to be cautious and not be the ones who get holding the company at the time when it is decreasing. So it is going to be, I think, a bit of a learning and education. But yes, I would like to believe that we do have retail investors. It is not the case, though, I have to tell you. But I would like to believe that we can get retail investors that take a longer term view. Longer term would be even if it's a couple of years.
Hmm.
Most retail investors, I think, come in on the basis that it's going to be a short turnaround and they're going to make
Short
good money.
turnaround. Yes. Some
Capitals
are just
don't have.
looking to exit even on the day of listing. That Zoom, it lists at about 50%, 100% premium, and we are out.
Yeah, well, I think the good news is at least our capital gains tax rules at least sort of force some
Yeah.
tax efficiency, at least for those that pay their taxes, to persist in terms of holding an equity for at least a year, and which is good. Yeah.
And naturally, I mean, no stock has that kind of depth that the entire retail lot can sell off on the first day. I mean, you need that kind of depth on the buy side also if you have a sell side strong.
Yeah.
With that, ma'am, thank you so much for joining us on this episode of Visionary Talks by Governance Now. And thank you so much, ladies and gentlemen, for also joining us. It was a complete pleasure, ma'am, discussing a wide variety of issues with you. Thank you so much for your time. It was a complete pleasure. Jai Hind.
Thank you. Thank you, Kailashnath.